right now we're actually at an interesting point because there's something that happens every 4 years when you have this halving event. If you were to think about it, and let's bring it back to housing, if every 4 years builders said we're going to build half the amount of homes that we did 4 years ago, demand is continually getting tighter. And when that actual supply shock occurred, what would happen? You'd probably see home prices rise significantly. Well, that's exactly what happens with Bitcoin. And this is a chart that I wanted to share with you of the previous halvings, right? So the first halving occurred in 2012. The supply of Bitcoin, or the reward, got cut from 50 to 25. And the amount of Bitcoin coming to market every day went from 7,200 to 3,600. So the halving occurred here. Look what happened to the price of Bitcoin. It shot up. It went up 9,715%. Now, one thing you'll also see that's a common thread is while Bitcoin has these parabolic periods, it always has a pretty severe bear market that follows, where it is not uncommon to see 70, 80, 85, even 90% declines. But then it usually rallies into the next halving. And then from the time of that next halving in 2016 to the peak, it went up 2,862%. And then you had a bear market, and then you had the next halving, and it went up 720% to this peak. And then you had in 2024, April of last year, you had it enter around 60,000. And I think you could also see another pattern. So after the halving, you typically have a huge run up and then a bear market, halving, huge run up, bear market. The first return was 9,715. There's diminishing returns that are occurring here as the asset matures, as it grows in value, law of large numbers a bit here. But you then notice the return in this next halving was about roughly 30% of the previous one. And then 720 is roughly 30% of the previous one. Well, if we just stuck with that pattern, you would expect during this halving here, this next cycle that we're in, to see about a 216% return, which would bring Bitcoin to a price of like 188,000 per coin. Now, I don't think it's unreasonable to say that Bitcoin, and my target actually for Bitcoin was that, over the next year or so, that it would reach somewhere in the 130 to 150,000 range. It already did touch 109. It's now at 95. It's not abnormal to see 30% pullbacks during bull markets. That's actually more the norm than the exception. So if it is an investment that you are interested in, you better strap your seatbelt on and be prepared for volatility. For some people, they don't have the stomach for it, and it's not for them. But you certainly, if you bought and held this thing and didn't try to get too cute, I mean, there's no other investment that's yielded you greater returns. And the one caveat I would say with where Bitcoin's going is that we haven't necessarily seen a market like this through Bitcoin's existence. Yes, you had like the COVID recession, you've had some bear markets, but you've never had like a bear market paired with a recession. And because of the close ties of Bitcoin to stocks, what's going to happen if we do see a bear market and a recession, which I'm seeing a lot of recessionary signs out there. Is Bitcoin going to be uncorrelated, or now, especially because of the participants, is it going to fall with stocks if that happens? And it would be the first time that we didn't see, a really, really parabolic run up like we have every other halving based on this point in the cycle. So it's tough to say, to be quite honest with you. I mean, I can tell you confidently that, if you're not looking to make a quick buck over the next year or two, if you buy it even at these levels, I think it's going to be much, much higher when we look out several years. But I am a big believer, because it's such a volatile market, in not necessarily trying to time it, but dollar cost averaging. And what that means is you buy a little bit on a regular basis. So personally, I'm buying on the 15th and 30th of every month. And the reason why I do that is the reason they call it dollar cost averaging is because you're going to sometimes buy when prices are higher, lower, and over time it's going to dollar cost average your cost basis essentially lower. And it's consistent. It takes emotion out. But then if you do see, for instance, Bitcoin went from 109 down to 74, when I see that happen and I have the belief of where it's going to be down the road, sure, I'll load up a little bit more there and reduce maybe my cost basis if it's not already beneath that, or just buy more where I think it's attractive. But I would recommend not trying to time the bottom or the top of the market. I would recommend just buying on a consistent basis, and you will average your cost.
Got it. And Dan, so first of all, that chart was brilliant. I have not seen the halving and, kind of the fairly predictable cycle that then happens after that. I wonder, have you looked at what the timing has been from the halving to the
peak?
Peak? Yeah. And where are we in that cycle on after this halving?
Yeah. So based on history, and sometimes it's a little longer, a little shorter, but based on history, I would expect it to hit like that target somewhere in the August to the end of the year period of time. So, could things be different this time? Maybe. But at least historically, from the last several halvings that we have seen, and there's not a huge history there, right?
Right.
But based on what we have, you would expect it from like August to maybe the end of the year in that time frame.
Got it.